Hey everyone, Abaroa for Financial Intelligence Training. It's Friday, it's June 29th, it's 2018. It is the last day of June, and as you can tell, I'm back in Florida from my California trip. Laguna was beautiful. I hope you guys watched the video on Wednesday. I love that part there, Crescent Cove. So we're going to talk markets in a second, but first, the sports world, more specifically the soccer world, is going to be paying a heck of a lot of attention as we are pulled into the knockout round of the World Cup. It's win or go home now. Speaking of home, LeBron, well, he's going to be looking for a new one as he's opted out of his contract and is up now for free agency. And I bring that up because he said no thanks to $35 million. What a nice position to be in, right? I don't need that. I'll get something better. Okay, so enough of that. Markets are charging higher into the close today. Well, at least as of 1 p.m. Eastern they are. We're up about 22 in the S&P, and we're heading into the final 3 hours of trade. Now, you think that has anything to do with the last day of the month? Maybe the last day of the quarter? Well, some think so. And if we look at yesterday's action, somewhat closer, well, you might think so as well. What do I mean by that? Well, the Dow closed off 450 plus points from its highs to slide under the 200-day moving average for the second day this week. Now, when I said we've got to see who's going to give in first, what we saw in the Dow yesterday was offering no assistance to the market continuing its charge higher. And we saw the betas give in some. They hammered the Russell. It was down 28. They hammered the NASDAQ. It was down 116. Both remain north of their 50s, their 50-day moving average, but this is not what I discussed as what would be helpful. I'm simply pointing that out because many areas of the market remain bad and continue to worsen. And with the strong taking a few good punches to the ribs and one to the face, well, that's not what we want to see. Now, let's move a little past it. Let's talk about the financials because they are really getting ugly. We are 106 days into a flat base now. We've bounced off last 2 days. We've bounced off of that base level, but this is after 10 solid days of south of the border residency, meaning sub 200-day moving average. So let's see what happens mañana, meaning Monday. Now, the transports, they're also living under the key level. They're now just $10 off of the February 9 intraday low, which, as a reminder, was 15% off of that 126 high. That was 175. We're trading 185-ish right now. And SMH, the semiconductors, they are now sunning below the border as well. So if you're a financial intelligence training student, you know how troublesome this is for me. 3 of the 3 key areas that I like to watch, well, guys, they're living in sin. Now, I hope this is just a temporary moment of lunacy for the 3 and that we see some return to sanity. But I've got to tell you, we are going to see earnings start in just a few weeks, and we'll be starting with the financials. So this is a very important time. So A, understand we need a good number, or good numbers, I should say, reported from the banks. And B, we need an even better reaction to those numbers from the market. In my opinion, this is a very important time for you to focus on your risk, monitor your exposures, and know exactly what you're going to do if indeed things do break down. Now, if you're trying to trade these moves, please remember stock and stock options involves a substantial degree of risk. It's not suitable for all investors. If you like the charts like me, well, you know, past performance, it's not necessarily indicative of future results. I'm Abaroa. This is Financial Intelligence Training. Have a great weekend, everyone. Thanks for watching.